Welcome back. Let's continue with our corporate conversation, even as the market's slightly under pressure right now. Sanjay Shah, the Chairman and Managing Director of Prudent Corporate Advisory Services, joins in to decode their fourth quarter earnings. Thanks a lot, Mr. Shah, for joining in. I just have a two-part question to start with. One on the mutual fund business, where there have been TER impacts, etc. You do believe that NIMs will hold on out here, or the yields will hold on, despite you having about 100 basis points in terms of yields? That's one. And secondly is the insurance business, where it's surged about 69% as against a decline that we saw in the mutual fund business. How scalable is this, and where do you see insurance as a part of your overall mix over the next few quarters and a few years? If you could give us a short to medium term guidance on that. Insurance and the yields on your MF business because of the TER rules that have come.
Good morning, Maglam. Good morning. And let me first of all talk about the TER change which has been brought in by the regulator, which has been applicable from 1st of April. So there are answers to two questions. One is my existing book, and we believe that because of this change, there are two parts. One was GST and another was the 5 basis point of exit load, which has been removed by the regulator. So we believe GST is a revenue neutral for almost all the players who are part of GST regime. So I don't think there will be any impact because it's just a change in calculation. Previously, we used to get 100 rupees. Now we'll get 85 rupees. We need to raise an invoice for the GST and they'll reimburse the GST to us. So that is one part which is revenue neutral for book also, from the existing new business also. As far as the additional 5 basis point cut, we believe, I think at my book level, I'll have the impact of about 2 to 3 basis points. As far as my old business is concerned, till 31st March, we have a book of about 1,20,000 crore. I think 2 to 3 basis point impact will come. However, from April onwards, whatever the new business which is we are going to have, I don't see a significant impact because I think their pricing power has remained more or less same. However, I can tell you this is a huge beneficiary things for us because there was a lot of anomaly between GST registered and non-registered partners, and those who are small players and not falling in GST regime, I think the revenue will shrink by about 15 to 20%, and this will pave way for people to consolidate to a quality platform, and we being one of them, I am sure will be the huge beneficiary of the consolidation which will happen into the industry. Talking about your second question about the insurance, as you knew, Mangalam, since last couple of years, we have been hugely concentrating on the creating another alternative line of business, and insurance become a significant for us. If you look at my last full year, out of 100 rupees of revenue, almost 14 to 15 rupees has came from insurance. And normally insurance Jan, Feb, March is a very, very strong period. And we also had one of full year additional revenue which we are supposed to get from the insurance company has been booked by us in the month of Jan, Feb, March. That's the reason revenue has grown up significantly. However, we believe that insurance is going to be a huge growth driver for us going forward. That does not mean that mutual fund will not, because I think we believe mutual fund itself is going to grow into a higher double digit, but insurance is a small kitty in our pie. I think growth will be significantly better.
Well, Mr. Shah, going back to what Mangalam also mentioned about the TER and the exit load changes that have come in, do you believe that because of these regulations, the smaller players would exit / consolidate faster? And is this a very big opportunity for a more organized player like you to increase your market share in this segment?
Yes, sir, definitely, because we believe that the advantage which people were having because of GST was not something which was going to sustain for a long period of time. So I think it's a rationalization of structure, and you are very, very right that the player who are not falling in the GST, their revenue will go down by 15 to 20%, and they have to be a part of some quality platform. I can tell you that's the reason in the current year, we are going to grow our network to beyond 30 cities significantly. So we currently have roughly about 140 branches, and we are planning to reach add another 32 branch in the current year. So almost 20% more branch we are adding, because we believe tier 2 and tier 3 city will offer a lot of opportunity to us. So yeah, sure. It's a great opportunity from a consolidation perspective.
Okay, Sanjay, you're going to be adding new branches, but generally in terms of the expansion plans you have this year, and you're talking about the regulatory changes, opening up the space for GST compliant players like you, will some of this growth come in organically? Are there any acquisitions you're evaluating that are on the table? What is the size of acquisitions? In what spaces would those be?
No, I think we already did one acquisition last year of about Indus Capital, which is a Pune-based company. That entire integration of that acquisition has been very, very successful. We bought that franchise for all cash deal of about 135 crore. We have been regularly looking out because I assume that this business is a business which doesn't require any kind of investment. It's a cash cow, and we generate roughly about 260 crore cash every year. So we are consistently looking for the acquisitions, but it's a slow process, right? Because there are a lot of things which you need to evaluate. So I'll not be able to say anything which is very, very clear as of now, but regularly that process is going. It's a working process for us.
All right, work in progress for you. Just a final question from my end, sir. All things said and done, whatever we've discussed so far, if you could boil that down to what it means for your P&L going forward. What's the outlook for FY27? The key growth drivers? What are the margin expectations that you have?
Mangle, if you look at last year, I think we had one of the best year as far as my gross sales, net sales is concerned, my SIP book addition is concerned, partner addition is concerned. So on all parameter, last year has been significantly better. Only thing which has not supported us was during the full year, mark to market has not supported. Rather, last quarter, we added about 4,300 crore of net sales, but there was 15,000 crore of mark to market losses were there. So from a futuristic projection point of view, we assume that this year may not be a huge, what you call the drainer as far as your mark to market is concerned. So I'm assuming in the full year, if we have about 10-12% of mark to market gain, then I'll definitely be able to easily add about 10 to 12% by way of net sales, because my SIP book is now about 1,200 crore. So I think roughly we can easily assume that on a full year basis, I should do about 14,000, 15,000 crore of what you call the net sales. So all put together, I think I assume that my mutual fund should generate a revenue of about 20-22%. I think last year was also spoiler on my treasury income because of the January, February, March. I think that also would not be a part of current year. And insurance, I think we are very, very positive. We have a huge target as far as health is concerned. Only thing which I think I'll not be able to say very comfortably, because we're expecting some significant change as far as revenue is concerned from the IRD also. So when that change will come and how industry will absorb that change, I think that's a question which is I think it's not very clear at this point of time.
Sanjay, just one clarification, if you could leave us with the liquid loan product. It seemed to be contributing to your revenues last year, but for some reason, you've chosen to discontinue it. Was there a regulatory reason behind this, or any other particular reason you could highlight for us?
If you look at last year, there are a lot of changes which has been brought in by the RBI, and they say that the entire P2P model has to function based on some 6-7 key changes which they have brought in. And I believe that entire P2P model was non-sustainable, keeping those changes in mind. And hence, not only probably me, but entire P2P industry has gone through a consolidation, and we decided not to continue selling. And by this time, I think because my book on P2P at the peak was roughly about 650 crore. I think when I'm talking to you now, I think my book, outstanding book, as the maturity is happening every time, hardly about now, I think about 10-15 crore. And within a 2 month or two, I think it might be a zero AUM as far as liquid loan is concerned.
Mr. Shah, thank you so much for sparing time and joining us today. Wish you good luck for FY27 as well, the management of Prudent Corporate Advisory. And well,